The world's second largest platinum producer, Impala Platinum, reported a 41% rise in full-year headline earnings per share to R11.05. This off higher sales and stronger dollar metal prices. Eleni Giokos caught up with the CEO, David Brown.
Thank you. There were two major drivers for this last financial year. The first one was, as you quite rightly pointed out, higher dollar metal prices. Dollar metal prices were buoyed by a recovery in the automotive sector in 2010 and going into 2011. And also we had significant increases in investment during the 2010 and 2011 up-to-date period. The other major driver obviously was the production recovery at Impala Rustenburg. We hit our target of 941,000 odd platinum ounces, and we also saw the full year of phase one expansion at Zimbabwe kick in, with order of about 175,000 platinum ounces. So those two factors came together and obviously led to a significant increase in gross revenue, which obviously increased by 30% to just over 33 billion rand.
Also very exciting in terms of what's happening in Zimbabwe. Zimbabwe, of course, as you alluded to, but then again, we've also seen indigenization being a very key factor, and we've also seen a lot of applications being shoved aside at this point in time. How are you feeling about this factor? Because I know you've actually come out and said that it is going to be a very negative, a big negative for not only the country, but also the operators within the country.
Yeah, I'm glad you mentioned the word exciting. I suppose it is exciting in some respects. I think from our point of view, quite clearly, the issue of our plan being rejected is obviously disappointing. We certainly believe that the rejection of the plans does create for an unstable investment climate, which obviously is not good for current and future investments in that country. That country obviously needs significant foreign direct investment, and quite clearly this type of situation actually makes investors shy away. So certainly from our point of view, quite clearly we are still in negotiations with government. We're still very confident that we'll come together and we'll find a solution that will be good for both the country and obviously for the company. And quite clearly from our point of view, I think, as I said before, and I want to reiterate, we're not opposed to the indigenization of the company. I think what we are talking about is the relative equity percentages that government is requesting, and what we believe is a doable one when you balance risk and reward.
Of course, government is asking for 51% equity. What kind of number are you preferring at this point in time?
Well, we think something along the similar lines of the South African empowerment legislation, which is 26%. We think that is an eminently doable percentage. We certainly believe that if you go higher than that, quite clearly you begin to skew the risk and reward relationship, and certainly that's of concern for us.
And if government does not budge on that 51% equity, does that mean that you'd be relooking your assets in Zimbabwe? Where to then from there?
Look, quite clearly, if government was not to budge from the 51% pure equity position, quite clearly we would have to relook at our investment profile there. But from my point of view, I'm very confident that we'll find each other. We've just got a bit of a journey to go.
Let's touch on earnings. And as I mentioned, headline earnings per share, they're sitting at around 11 Rand a share or so. Looking at where it was in 2007, 2008, around 20 Rand a share. Are we going to see these kind of numbers coming to the fore again?
Yeah, I think what you saw in 2007 was actually the converging of very positive dollar pricing environment, but also a subtly weaker rand as well. And certainly I think our outlook for the rand is probably to stay stronger for longer. So from that perspective, we're probably not going to see the 20 Rand number for some time yet.
Let's touch on palladium as well, and you're also quite a strong player within this space. We know that palladium prices have increased substantially. Tell us about substitution when it comes to palladium for platinum. Do you think that there is a very strong case going forward?
Well, I think the substitution method that you've seen, there's a lot of the substitution I think has taken place. The gasoline engine market largely is already a palladium market with very little platinum in it. The substitution was really in the diesel sector, which is mainly a European sector, where you were seeing palladium make inroads in terms of platinum, but that was really on the pricing parity basis. And if one looks at the relative pricing of the metals now, you probably could still see some element of palladium substitution for platinum, but we certainly believe there is a finite amount that can take place purely because of the processes involved. But having said that, being both a platinum and a substantial palladium player, we're obviously fine by both.
We've seen the dividend increasing by around 46%. You've also got a very strong cash position, 4.5 billion rand sitting on the balance sheet at this point. Plans going forward, and we know capex, in fact, for this financial year has also increased substantially. So what plans do you have to put that money to work?
Well, I think twofold. I think we've always tried to get a balance. As you're well aware, the economic turmoil in the markets at the moment, I suppose, lends one to being slightly more prudent. So we'd like to maintain, first of all, a strong balance sheet. I think the second order point for us is after we've maintained a strong balance sheet, it's really equitable distribution between shareholders and obviously investing for the future. Our capital plans for next year are on the order of about 7 billion rand. So as you can see, a substantial increase even on this year, which went up to 5.5 billion. But we would also anticipate to see the increase in dividend as well.
Touching on costs, only increasing by 8%, and I say only because we've actually seen other industry players coming under significant pressure. And in fact, the platinum sector seems to be now compared to what we're seeing with the gold miners. What kind of scenario do you see playing out? And obviously, labour and electricity costs are the two major headwinds facing mining globally.
Yeah, those are the two significant cost impactors. Labour, as you say, labour settlements in the last few years have been well in excess of inflation. We've had real settlement cost increases for a number of years now. The way that we have to offset that is obviously through productivity. We have to offset it through other means in terms of looking at efficiency of usage. But certainly I think the outlook going forward is for still probably real wage increases coming through, and also significantly real Eskom electricity price increases. And so for us, quite clearly, we want to try and ameliorate that through productivity improvements, through efficiency of usage, and obviously increasing production. And we believe certainly the outlook for next year would probably be about a 10-11% type cost increase on a unit basis, but we are going to try and target about an 8 to 9% increase.